Now the audio's working. Ollie, can you hear me? Robert, can you hear me now? Sound working now? Think that was bad connection on our end. Okay, there we go. Sorry about that, guys. Yes, we have sound now, I believe. Hello, Howard. Sound okay? Mike, we're good now with sound? Okay, there we go. Good now. Wonderful. Okay, there we go. I was on here a minute early. Couldn't wait to get back on here. Haven't been down on the floor since last week, and what a difference just a couple days make. Remember down here on the floor last week, guys? It was rocking and rolling. It was busy. There was a lot of chaos going on, controlled chaos, but a lot of chaos. Today, it is really quiet, and that's coming off yesterday, where S&P volume yesterday was the lowest that we have seen actually in a couple months. So, um, today got 564,000 contracts right now. That is just so incredibly slow. But something pops up here, we will go to it. Quick market update. S&Ps right now, they're flat. They are at the flat line. Little volatility today on some of that news out of South Korea, the martial law stuff. I'm not going into that. You can read about that. So that put a little vol into the marketplace. We saw S&Ps dip down. They were down what, 15, 16 points, I think, at their low of the day. Yeah, that's exact 60, 47 and a half. I'm looking up on the board here was the low of the day, and now they're right at the flat line. Bitcoin actually just turned positive. Bitcoin had been down 15, 1700 bucks earlier in the day. Gold higher. So one of those things that happens when there is a geopolitical confrontation or a risk sort of event. What do we see? We see gold move higher, and that was certainly the case today. Nasdaq up by 35 points, just 0.2%. What else we got here right now? Russell is down slightly, down 12 points, and the dollar pretty flat. Okay, Bitcoin hovering right around 96,000. So I think that we're just seeing a lot of calm in the market, which is a good thing, right? A lot of calm, a lot of positioning ahead of the big jobs number this Friday. This jobs number, it's going to really be one of the last big pieces of eco data that the Fed's going to have before their meeting in a couple weeks to kind of help them determine the rate path. Are we going to get a quarter point? More than likely we are. I think the market at this point right now is pricing it over a 75% probability that we will get a quarter point reduction. But really, what may change a little bit from that is what is the outlook for 2025? Is it going to be two more cuts, three more cuts? How is that going to make the Fed change their decision or just stick to the fact that, yeah, we're going to go on this, pace of quarter point cuts. All right, guys. So yesterday we talked about what's in a name. Today is part two. Yesterday we talked about butterflies, broken wing butterflies. So today we're going to get into one of those other strategies that, if you know how to trade it, it's awesome. If you just look at the name, you're a beginner, maybe you've even been trading for a while, and you look at the name and you're like, I can't trade that. What the heck? Well, we're going to talk about condors and we're going to talk about iron condors. Yes, that is a condor there, guys. Nice picture of a condor. So, what is a condor? Okay. And there's a big difference between a strategy that just has a name to it, like a condor or a butterfly, and then if you add the word iron in front of it, totally changes up the strategy. Let's focus on just a condor right now. Okay. So a condor, all options are on the same side of the ledger. They're either all calls or all puts. Okay, you can have a put condor, you can have a call condor. So they're all on the same side of the ledger. And all it is, guys, all it is the combination of a long spread and a short spread. So either a long call spread and a short call spread, or a long put spread and a short put spread. Your max profit, okay? Your max profit, exactly what we always talk about. That's why we have those swag t-shirts. You guys are all part of the Short Strikers Club. So the max profit on a Condor is going to be anywhere between the short strikes. And just like we talked about with the butterfly yesterday, there's going to be a spot where we want to say, okay, where does this spread max out? While this spread is worthless. And we will go through that. Okay. And then your max loss is capped. It is still a strategy that your max loss is capped. If you own a Condor, if you're long a Condor, your max loss is the debit you pay. If you're short a Condor, your max loss is same as when we look at a put spread or a short call spread. It's the width, so the maximum width of the spread less your credit that you received. Okay. Now, if we add iron into the name, okay, again, whether it is an iron condor, iron butterfly, if we add the word iron, all that means is now we're combining calls and puts. Okay, instead of all the options being on one side of the ledger, now you have one spread of each. Okay, that is what iron means. So a butterfly spread like we went through yesterday, okay, they were either all calls or all puts. You can do the same thing with an iron butterfly, having calls and puts. With an iron condor, okay, all same expiration date, all the options have the same expiration date. Your maximum profit, once again, okay, is going to be, where are those short strikes, guys? Where are those short strikes? And your maximum loss is capped also. Okay? If we sell in iron condor, the credit we receive, if we look at the max width of the spread less the credit we receive, that is our max loss. If you buy an iron condor, which we rarely ever do. Okay, I can remember one time we've actually bought an iron condor. Typically, we will sell them, especially when volatility gets really expensive. Okay, your max gain is the credit you receive. Your max loss is the difference between the strikes less your credit received. Okay, so let's take a look. I set up here and we're going to go through one of those P&L spreadsheets like what I did yesterday with the butterflies, and that'll all be available to everybody. But I set up here a Google call condor. Okay, again, we could have done the put side, but this just happens to be a call condor. Okay, so what do we have here? Well, we've got a combination of a long spread. That would be this $5 wide call spread. And then we have a short call spread. Okay, so in this instance, what I did here, we paid $1.35. This is what your graph is going to look like. Okay, this is what your graph is going to look like. Now, if we know we ultimately want the stock to be between the short strikes at expiration, okay, where do you think these 2 points are, which are the break even, with all of this being profit up here? Okay, if we know those are the short strikes, then this has to be 180 down here. This has to be 190 up here. So anywhere in the middle, okay, profit. If we go beyond that, okay, we will lose. But what can we lose here? What's our max risk? $1.35. Okay, $1.35. Now, let's break this down before we get into the spreadsheet. Okay, where is max profit on this, guys? At expiration, can you guys tell me where max profit is? Mike, do you mind handing me my water, please? Mike, can I have my water, please? Thank you. Thank you. Sorry, guys. It is really warm down here on the floor, even though it's about 10 degrees outside. Okay. Where is max profit here, guys? Okay, where are our short strikes? Right? It's all you got to look at. It's all you got to understand. You got to trust it. Okay, Robert. So Max profit between the short strikes at expiration anywhere, like I just put out on the graph, 180 to 190. And why is that? Why is that? Well, because at expiration, anywhere, it's not just 185, guys. Okay, max profit can be higher than 185 because once we get to 185, okay, what if we go to 187? Once we get to 180, guys, and move higher, this thing has maxed out, right? If we're 180 or higher at expiration, the long part of our spread is going to be worth $5, whether the stock is 180, 181, 187, 210, 300, doesn't matter. Okay? And at the same time, where is the short part of the spread? Where is that going to be worthless? Anywhere 190 or less. So if we just think about it like that, where does the long spread max while the short spread is still worthless? And that is anywhere 180 to 190. And the noise you hear back here, guys, is not trade. I think they are watching golf in the background. That's how little is going on here right now. So does everybody understand that? 180 to 190. Zora, how are you this afternoon? Does everybody understand that? So that's a condor, not an iron condor. That is a condor. Okay, all the options on one side of the ledger. Okay, before we move on here, yeah, you could probably figure it out. Probably figure it out. Here's our wheel word of the day, guys. Here is our wheel word of the day. Let's get those entries in. Don't be late. Please don't make us go back and look at the wheel. Make sure your name is on there. Okay, give you another minute or so here. We'll make sure all those names are on there. Robert's already tried to enter 4 times. Nice job, Robert. You never know. You never know if we slip up. Something's going on too, Robert. It's been what? 2 whole days since you've won? Unbelievable. All right, we'll come back to Groucho here in a little bit. Okay, so before we go into the iron condor, okay, before we go into the iron condor, let's actually pull up the P&L spreadsheet. Okay, we're going to do this just like we did yesterday. Can everybody now see the spreadsheet up on the screen? And just like yesterday, I got a lot of emails yesterday emailing in asking if you could get a copy of this, the link to it. And I sent those out. I will do the same thing again today. Okay, so here is the exact position we just talked about. Okay, long the 175, 180 call spread, short the 190, 195 call spread, and paying $1.35. At expiration, if the stock is under the lowest strike, which is 175, all these options are going to be worthless. Okay, all these options are going to be worthless. So what could we potentially lose? What could we lose there, guys? What we pay. Can't lose any more than that. $1.35. Okay, if we start to move above 175, that's where we're going to start making some money. Okay, or at least not losing as much, I should say. Our break even is going to be at 176.35. Okay, that is our break even because as we know, 175 is our long call, $1.35 at which we paid added on to that. That gets us to 176.35. Now, what if we are above 176.35? Okay. Once we get to 180, the spread is maxed out, right? But since there are no options between 180 and 190, okay, that spread is still going to remain at $5. It is still going to remain at $5. Okay, so here it is right now, and you can see anywhere up to 190, that is going to be our max profit. Look at that window there, anywhere there. Because again, that's the area where our long spread maxes out while the short spread is worth 0. Okay, now all of a sudden though, again, think of it this way. If we get above 190, our long spread can't make any more. We've maxed that out. But now the short spread is going to become worth something. Okay, so now you can see at 192, spread's only worth $3. At 193, 194, and then if we get all the way up to 195 or higher, okay, that is where we would get that max loss again. So this area right here, whoop, 192 is still a little bit of profit. Okay, 193, 194, actually 193 is still a little profit. 194, we're going to lose a little bit here, guys. And then 195 or higher is total loss. So if we look at that, and if we draw this P&L graph, kind of like we had seen, there it is. Okay, does that make sense to everybody? Because now we're going to go on to the iron side. Okay, let me know that everybody follows this here, guys. Okay, again, here is that extrapolated over that same curve. Okay, this is that same curve. I think I used either December or January for this. Not sure which one I used. It was either December or January. Okay, here's another look at word of the day before we go on to the iron side here, guys. Okay. Yes, Paul, as I mentioned, you can do a call condor, you can do a put condor. So, let's just say, for example, in Google, okay, we'll just stick with Google. If you were bearish, okay, you could do potentially the, let's say, 165, 160. So long that put spread, and then maybe short the 155, 150. So long that put spread and short that put spread. That would be a put condor. And your maximum gain there would be anywhere between the two short strikes. Paul, does that make sense to you? Again, if you have that put condor on, anywhere in the middle between those two short strikes, that will be your max. Okay, great. Now, let's go on the iron side here. Okay. Now, there's something wrong on this page. Okay, I didn't proofread this. Okay, I didn't proofread this. What is wrong on this page here, guys? Actually, first person that tells me what is wrong on this page, you're automatically going to get some swag. Okay, don't even have to be on the wheel. We're talking about an iron condor. So what did I label incorrectly here? Okay, nope. Nope. This is selling. This is a crit. You can do either a buy of a iron condor or a sell. Okay. This is selling an iron condor, which is why it says credit. Okay. So all of that is right. This is a credit. All of these expiration dates are identical. Keep them coming. Nope, we're not paying for it, Owen. We sold this, so we collected a credit. Maybe go beyond. Maybe go beyond what the strikes are.
12 to 13.
Okay, guys, I'll give you a hint. The strikes are correct. This is selling a put spread. There we go, Paul. Winner, winner, chicken dinner, Paul. Mike, please note that Paul is the winner of that. That is correct. For whatever reason here, I put in here a put iron condor. It is not a put iron condor. It's just an iron condor. It's a combination of calls and puts. Okay, and we are selling this, which gives us the credit. We are selling both a downside put spread and selling an upside call spread. And we're collecting $1.70. Okay, so what are our short strikes? The short strikes, 165, 185. Anywhere between 165 and 185, that will be the maximum profit, which is the credit we collected. Okay, we're going to go through that on the P&L spreadsheet here in a moment. But if the stock winds up anywhere between 165 and 185, all of the options are worthless. That would be the goal here. Okay, and again, that's what our P&L is going to look like. That is what our P&L is going to look like. We want the stock to remain in that range. Okay, so let's move on here. Let's go to our P&L spreadsheet. And down here, I put them on the same spreadsheet so we could compare them. You can see right here, we are selling. Whoa, 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 whoa. Okay, we are selling the put spread. We are selling the call spread and collecting $1.70. So before we plug all the numbers in here, what is the most we could lose? Now remember, in this here, the shorts are in the middle, 165, 185. What if we go outside of that? What if stock went down to zero? What if it went up to 200? Okay, what is the most we could lose? Who can give me that? What is the most that we could lose on that? All right, like these answers, keep them coming. Aiden, very nice. Very nice. Now you guys can all just copy Aiden's answer. Job, Aiden. Yes, $3.30 is what you're going to see down here. And why is that? The most the value of this could ever be worth. No, Robert, not the credit we receive. That's the most we could make, not the most we could lose. Zora, we're selling this. We are not buying this. Okay? The most this could ever be worth. If the stock went down to zero, this would be worth $5. If the stock went up to 200, this would be worth $5. It's $5 less the premium collected, which was $1.70. $3.30 is the max we have at risk. So let's fill in these prices here at expiration. See if that all plays out. They better, otherwise I'm going to have some egg on my face, right? Okay. Actually, let's add in one column here. I don't know why I didn't do that in the first place, but let's add in one column here. Let's make this 162. Okay. All right. Then anywhere, guys, anywhere here between 165 and 185, which are the shorts. So anywhere in here, that's our max profit. That's our max profit because all the options are worthless. So we've got our max loss over here. We've got a little bit of a loss here, not max, but we've got a little bit of a loss right here. And then we get to the first short strike and all the way up to the top short strike. We are going to keep our entire amount of credit. Okay, now, what if we go above the 185 there? What if we go above 185? Okay, we got to give a little back. And you will start to see, okay, we got a little bit of a gain here at 186. And we've got a loss starting at 188. And if we get all the way up to 190 or higher again, just like if we were below all the strikes on the downside, if we now go above all the strikes on the upside, what is going to happen? We are at our max loss. Cannot be more than 330. Everybody see that. Everybody understand that. So if we look at this again, okay, we've got the same exact curve. We've got the same exact curve. We want the stock to stay in a range. Okay, that is correct, Paul. If one side is maxed out, the other side is zero. So what Paul said is absolutely true. The stock is zero, you only lose on the put side. If the stock is 200 here, you only lose on the call side. It can never be worth more than the max spread on one side or the other. Okay, again, if you want a copy of this, guys, if you want a copy of this, shoot me an email. Now, Mike, do you mind putting in that link in the chat, please? I'm also going to add in a link right now, guys. This is a recording, a video that I did on explaining condors and iron condors. There's a link to that right there. So anytime you want to learn more about it, take a little bit more of an in-depth look at condors or iron condors, you've got that link. You can also find that on our YouTube page as well. Okay. Now, one last thing before we go to the wheel. Who's heard of this? Who has heard of this? We sent out an email about this at the end of last week. I've been talking about it a little bit in the room. Has anybody seen this out here? This is a contest that is out there. I shouldn't say it here since I'm standing at the CBOE. This is a contest by the CME. Okay, hopefully they don't come drag me out of here. Okay, guys, it is a free contest. If you log in, actually click on the link here. Okay, let's enroll today. And it takes you, I'll put a link in here for this. Okay, it takes you just to a login page. Okay, but this is a contest that starts this Sunday. Starts this Sunday at 5 o'clock Central when the futures open up again. CME is putting this on for anybody that wants to enter. They trade against me. Okay. Trade for 5 days. You could trade any CME product that you want. They have an unbelievable simulated platform for you to trade on. Obviously, you're not using your own real money. All you have to do is log in and use their sim platform. And look at that, guys. Look at that. Okay. Make sure if you have any interest, you got no downside to it. You got no downside to it. Here is, let me give you the link to it, everybody. I'm going to put it in the chat. Okay. If you want to register for that, there is the link. Okay. It'll be something fun to do. All right. Let's get to the word of the day. Let's get to the wheel. All right. There it is. All right. Looks like we're back up to about normal here. We already have Paul as a winner earlier, but Paul, you know what? If it's your lucky day, you win twice today. Here we go, guys. The wheel is in motion. It is in motion. And oh, it's not Robert again. Sorry, Robert. Kenny Kiefer. Kenny Kiefer, are you in the house? Congrats, Kenny. If you are in the house, you got to be here. Let us know. And don't forget to shoot me an email at prosperswag@prospertrading.com. Send me an email with your address and the size swag. Oh, a little busy over there. Okay, Kenny is in the house. Way to go, kid. Beautiful. Make sure you send me an email. We'll get you out some swag. All right. All right, everybody. I'm hoping this is helpful going through again what I want everybody to understand, especially if you're beginner, maybe you haven't been trading that long. Okay, is trading strategies do not need to be difficult. I'm not saying it's easy to trade, but understanding the strategies do not need to be difficult because really, all these crazy names, whatever they are, they're just combinations of simple spreads that you are already trading. All right, everybody. Have a great one. Appreciate all of you. Have a great, great night. We'll see you tomorrow.